Hi everyone, you're once again welcome back to my channel. Tonight I want to bring to you a quick update on our asset pairs that we've been trading so far. Today we are looking at volatility 75, volatility 100, as well as volatility 25. Okay, and what do we expect for the week? What's our expectation for the week? All right. So quickly, let's go down to our charts and then begin our lessons. All right. So you can see clearly on the chart that volatility 100 we have been trading lower, and we have had lower prices for some time now. Price traded to this point, traded up, took down the buy side liquidity resting in here, and then rallied down, took down the sell side liquidity resting below this point. And we could see the price traded into this area, and we could see all this consolidation resting inside this area. Okay, we can see some form of consolidation for some days now. All right, so now what is the next move? What is price going to necessarily do? Okay, so to get a clear picture, we have to go down to a little bit lower time frame. So let's go down to 4 hour time frame and see what price is doing. Okay, so now price traded from this high to this low, traded up. So from this high, let's start from here, from this high to this low to this high. So it means that now we have a low, a high in here, and a lower high in here, and then we have a low here, and then it trades down to this lower low, and then we have a lower high, and then we have this low came in lower than this. If you check the price, this came in at 1188.42, and the low in here came at 1189.46. So this is much lower than this, so it means that we had another lower low. And then the next thing it did was it took down the high in here, which obviously makes you aware that in as much as we are not having a lower high, but we're having a higher low, means that the markets have shifted to the bullish side. Okay, now there was a shift in structure in here. Now let me give you another clue, or a clear depiction of when we see we have a shift in structure. The last time I made mention that to say that your shift in structure is more concise and clear, you should make sure that the bodies of the candle are closing above the previous high. The bodies of the candle should close above the previous high to give you a more clear and then a more concise scenario that yes, price has actually shifted to the buy side. Okay. Now, as the body of the candle traded above it, we knew obviously that price has shifted. So what did it do? It traded down towards this area, had some sort of accumulation in here. We saw that price rallied down and traded below this low, but didn't take down this recent low that was used to run the high. So this low was not taken. So you notice that price traded towards this area. Look at it. Let me put lines there for you to see. So price traded into this area, but didn't take down the low of this on this other candle. So this is it. You could see that the low in here is not, it didn't take down this low. So now here we have a low here and we have a low here, but this low is higher than this, so we have a higher low, which gives you the scenario for a bullish market. Okay, we are not more having a lower low. Okay, now price trades in here, and then we see the reversal up, and then what was the next target? The target was it had to take down this high in here. Okay, so the target was it took down the high resting inside this area, and beautifully there's more confirmation, that is the bodies of the candle always closing above our area of interest. Okay, so I'm always struggling with this line thing. Anyway, all I need you to know is that it had taken down the high in here with the body of the candle. Okay, so which gives you the narrative that okay, we have shifted structure again to the upside. Now price retraces into this area, and then we see a bounce back into the sky. Now you see this form of consolidation in here, this type of consolidation where we have the bodies of the candles lining up. It creates some sort of liquidity. Okay, it creates liquidity when the bodies of the candle are lined up like that. So you could see that it has created some sell side liquidity. It is more like having equal lows. So price dips into it. Anytime you see that form of formation, you realize that price would obviously move towards that direction. Price dips into it and then takes down the buy side liquid, sell side liquidity resting below the bottom of the bodies, and then the sell side liquidity resting below these equal lows as well. And then we see the price rally up to take down the high in here. Okay, but amidst all that it did in here, it still didn't take this low because we had already shifted structure. So the swing that was used to shift the structure upwards, price will trade back into it, giving you the low risk buy entry. So you buy you make your entries in here, and then where do you exit? You take your trades, you take profit here. Okay, now beautifully we have price doing the same thing here. Price comes back into this area, and we have, so now let's see why price reversed along this area, because on the 4 hour time frame you could see that it wasn't into the main threshold of this other block. It traded below that, below the main threshold with the bodies. So let's go down to our 1 hour time frame to get more confirmation on why price reversed. So let's put a line, let's indicate where price actually reversed with the bodies of the candle. Okay, I'm always using the bodies of the candle to tell the story. Okay, the wicks are always doing the damage. Beautifully, you could see that this is the body of the candle. See, it lined in the mean threshold of this bearish order block. Sorry, this bullish order block and this bearish candle. Okay, so this is the bullish order block, and then price straight into this order block, and then it gets bounced off inside this order block. Okay, now watch this candle. This is the reinforced order block strategy that I taught you some time back. Okay, and then beside the fact that there was an order block, there's a fair value gap resting in here. Price closed in but didn't close in fully, so price actually came to close in on the remainder of the fair value gap. Okay, then it's rallied up, it rallied up. Now watch this. Price also reverses and comes back into this particular order block in here. We have a fair value gap resting in here. Okay, price trades back into the mean threshold of this order block, which has traded into a previous order block, and then we see price get bounced off at the mean threshold of this order block. Ignore the candle, the wicks, which are always doing the damage. Okay, so we are using the bodies of the candle to tell the story. Okay, so now we have our reversal at this point. So what is our next target? Our next target is looking up these highs in here to take our profits. Okay, whatever may happen, should price reverse and close below this low, obviously we know that we have shifted course. Okay, but now, so that's why we set our stop loss somewhere in here. We could have set it a little bit closer, but we're giving a little bit room so that we see how the market plays. Okay, all right, now let's go down to the next asset pair, which is volatility 75. Now with volatility 75 on the day, on the 1 hour time frame, if you watch my previous video on my 1 hour time frame, I showed you where there was a shift in structure in here. So the market shifted structure at this point, and then we saw that it broke down with the body of the candle below this low, and then afterwards we saw a form of consolidation happening in here, price sweeping highs and then taking down the lows, and then we had this low happening in here. So I was expecting that this low would have taken down this low, but then it didn't take down this low with the body of the candle. So we had what we call a failed swing. So with a failed swing, what I necessarily expected was that price is still inside the same how do I call it, price is still inside the same range. Okay, this same swing. Okay, so from this swing, in as much as we had a failed swing, now it becomes the low, it forms the low for this high. Okay, so this failed swing becomes the low for this high. So if you are considering this high, where is it nearest low? It is this low. Okay, then price moved from this to this. So if price should reverse, it is more like having this form of setup. um, so you have something like this. In a bearish scenario, have something like this, and then you expect markets to move, not to close above this, but anywhere inside of this area is okay. So price moves towards this direction, and funny enough, it didn't close above the high. And then what's our next move? We are in a bearish market, so a high, a lower high, a high, a low. We have to find a lower low. So we have a lower low in here, and then price moved and closed in at the body of the candle below this low. Okay, that's when we know that we have shifted structure. And then what did the market do? The market reversed into this area. Why did the market reverse into this area before breaking down? And it didn't go further up. Yes, there was a bearish breaker here. There was a breaker here. This last bearish candle that was formed before that lower swing moved up. So that's a breaker. Price traded into it, and then it broke down further into this area. And you could see that we have been in this structure. Okay, possibly we can still have a reversal back into this area to take down the buy side, to take down the fair value gap resting in here, and then we can continue. But for now, you can see what price is doing here. You can see that, well, there have been a shift in structure here. Yes, it's possible price can come down in here by rally up and then take down the fair value gap before we continue to our downwards direction. Okay, so now let's look at volatility 25 as well. So with volatility 25, as you watched in my previous video, that from this high all the way down towards this low, there was a consolidation in here. Price was accumulating more orders in here. It went up and then it dropped. Now when price rallied back into this area, I was expecting that price would rally down and take down this low with the body of the candle, but price never did that. It has just been accumulating more orders along that same spot. Okay, so what I'm necessarily expecting is price can either rally up to take down the highs resting in here, as well as come to even take the high resting inside this. Unless otherwise we have price breaking below this with the body of a candle, then I establish that this is our it's a high which cannot be violated. But for now, in as much as price hasn't violated this low in here, this particular low, I still see this high as a short-term high which can be traded into and be violated. Okay, so beautifully with volatility 25, all we have to do now is we have to just wait and sit patiently and look at what the market is going to do. If price comes down to this area, we have low risk buy to enter trades, and then you place your stop below it, so that if it breaks the structure to the downside, you know that you are out now. But for now, I'm still seeing more potentials in here. So we have this is what we call the high resistance liquidities, like liquidity that is running the highs and then the lows inside of a particular consolidation. Okay, so price has taken down the high in here, taken down the high in here, all the lows resting here has been swept. It comes again, goes up, comes down. What does it do? It comes to sweep the low in here, goes up, sweep the low in here and the low in here. I'm expecting all the buy side liquidity resting above this and this and this. All this must be swept. Okay, so beautifully, that is what is transpiring on volatility 25. So someone asked me about the low resistance liquidity. I said about high resistance liquidity, which is sweeping the highs, the what's the name, the highs and the lows in a consolidation. But low resistance liquidity is more like this when you have a trend. Okay, so let's go down to 25. So when you have a trend like this, low resistance liquidity, when you have a trend like this, so liquidity resting above this are low resistance liquidities, and this, so there's this point, this point, and this point. Okay, all the liquidity resting above it are low resistance liquidity, so price can actually easily run this and then run this as well, as simple as that. So that is low resistance liquidity. Okay, the high resistance liquidity are when price is ranging or it's in a trend, it's in consolidating, right? Yes, so beautiful. That's the high resistance liquidity and low resistance liquidity. Okay, so that is it. So if you are new to this channel, I'd encourage that you subscribe to the channel, and then share the video for others to watch, share on other platforms for people to watch. If you watch the video and you like my content, kindly give me a thumbs up. All right. So until we meet in the next video, I want to wish you all the best in your trading, and enjoy the rest of your evening. Until we meet again. Bye.